Alrighty, so like I said, I'm going to talk about crypto assets from the perspective of a long-term investor, primarily as money, where I believe they provide the strongest advantages over incumbents. And then I'll talk about some bullish catalysts for a new non-sovereign form of money like Bitcoin. So why now in the macro backdrop? Well, unlike some people, I don't think that it's an ironclad law of the universe that Bitcoin just increases in price. I think its price is a function of geopolitical instability and money supply around the world. So the question to ask is, will those two things increase? Which I think is a resounding yes. And in my opinion, there's really no better way to describe our current environment than geopolitically unstable. So I'll touch on some reasons why I believe that to be the case. If you locked me in a room, I don't think I could design a more perfect macro environment for Bitcoin than what we have right now. The combination of democratic socialism, MMT, or modern monopoly money theory, QE infinity, 10,000 boomers retiring daily in 2020, and all of this coinciding with the halving in 2020, it's really a thing of beauty. So why will monetary bases increase around the world? Well, I think our monetary policy over the next 10 to 20 years is going to make the last 10 years of monetary policy look thrifty in comparison. Since 2008, which was a debt crisis, we've added $60 trillion of debt. Real on-balance sheet deficits are now their largest sum in peacetime history, and there's no sign of slowing down whatsoever. But if you add in off-balance sheet liabilities, promises to baby boomers, and all the healthcare entitlements and Social Security entitlements, our deficits are 10 times higher. They're $200 trillion, which is 10 times our current GDP. And if you take our on-balance sheet interest expense and add in these off-balance sheet annual entitlements, our real interest expense, the sum of those two, will actually surpass all of our government's tax receipts by 2022. So if you remember from Econ 101, which evidently doesn't matter anymore, debt needs to be paid back. And once interest expense surpasses all tax receipts, the only way to do so is with more and more and more debt on top of that. So buyers of our debt are acknowledging that the only way they get paid back is with more buyers in the future. Some may call that a Ponzi scheme. I will not go there yet. Foreign buyers recognize this, and they're slowing. Since 2014, they've no longer been buying our debt in the same quantities. And this is a big reason why the trade war is happening, in my opinion. I think everything else is a facade, and a lot of it comes down to China stopping to buy our treasuries and finance our quasi-bankrupt entity. Simultaneously, as the supply of debt, simultaneously as the demand for debt is decreasing, the supply is about to increase dramatically. We're seeing bipartisan support for MMT. And Trump is really our first MMT president, actually. Why is this happening? Well, 2008 and TARP bailouts were really a socialist policy for the bankers. Returns to capital have done very well since then. Returns to labor have not. So the rest of the country is calling for increased fiscal spending, and it looks like they'll probably get it. For example, the Green New Deal, which I don't think will happen, would hypothetically cost $90 trillion. All tax receipts are already going to the boomers by 2050. So there's absolutely no room to expand our balance sheet at all right now. And we're late cycle, when traditionally you'd want to be paring down your fiscal spending so that in the case of an inevitable crash, you have room to increase that amount. But we're doing the exact opposite. And if you look at 1929, that last deleveraging, we started at about 70% debt to GDP. By the end of it, debt was at 90% to GDP. We're already above that right now. So this debt deleveraging is going to be huge. So what happens from here? Well, the only way to get out of this hole will be to ease. To ease by increasing the money supply and decreasing the debt burden. So we're drowning in debt right now, but the problem is that there are not many tools left because we've been on this QE Novocaine for 10 years, and there's more and more of this socialist rhetoric that will only increase the deficit. So we're going to have to resort to very unorthodox monetary policy. Simultaneously, we're seeing this play out with this arms race to devalue currency. Just last week, Draghi came out, trying to devalue the euro once again, and Trump attacked him because he realized that all currency value is relative. And if he wants to win in 2020 again, he needs a lower currency to reignite this manufacturing base in the country, which may or may not happen. But this is his only chance of doing so. So we're going to see leaders around the world all conspire to lower the currency value, which couldn't be more bullish for Bitcoin. Simultaneously, we have central balance sheets, which are about to explode in value. Just last week, we had the FOMC meeting where they suggested that towards the end of the year, they may start purchasing treasuries again. And the reason, like I said, is because the supply of them is increasing massively, and the demand from foreign buyers is slowing. The only way to finance that will be out of the Fed. So the money printing machine is about to get revved up again. And Japan, this chart, which is overlaid 10 years prior to us, when their rhetoric started that they were about to reduce their balance sheet, that was just inning one. I mean, QE is really like monetary crack, and we're about to relapse. There's absolutely no way it ends. Even Dalio, an enemy of Bitcoin, agrees that you could have a 30% depreciation of the dollar throughout that period of time. He's a pretty smart guy, other than his views on Bitcoin. Talk about unorthodox monetary policy. Well, the former IMF chief economist suggested recently that the Fed should buy stocks in the next recession. I mean, this is what an economics degree gets you these days. When stocks fall, it's usually a sign that malinvestment is correcting in the economy. But instead of responding to that, they're just papering it over and trying to reinflate another bubble. Yellen, who's retired, still is chiming in and thinks the Fed should commit to booms to make up for major busts. I mean, this is not monetary policy. This is just rigging the economy. So how do you preserve wealth in a world like this? Well, the way to get out of a big debt hole that governments have, the approach they've traditionally taken is by taking real rates down below 0%. And actually, in 1945, post-World War II, from then until 1955, we had negative real rates, meaning accounting for inflation, of negative 5% to negative 50%. We're going to take that same playbook. In that world, you can't own cash. So where else do you put it? Well, the S&P 500 is near all-time highs on a CAPE basis. I actually don't think it's too overvalued right now, but there are lots of pockets of overvaluation. I call these three companies fiat companies that only would exist in this cheap money world. Beyond Meat is worth $10 billion, and that's dog food. WeWork is worth $40 billion, and supposedly based on its valuation, a floor of WeWork is worth more than some of the buildings it's in. Tesla, I won't go into right now. Government yields simultaneously are at all-time lows. And modern portfolio theory would tell you just to diversify 60-40 between stocks and bonds because they're negatively correlated. But for as often as they're negatively correlated, they're actually positively correlated. So a 60-40 portfolio is not going to save you. Simultaneously, Bitcoin actually has a higher yield than 18 countries in the world at 0. And GMO is predicting negative returns for most asset classes over the next 7 years. So what does well in a world like this? Scarce assets are the only assets that are going to do well in a world where your purchasing power is whittled away. As mentioned, Japan went through something very similar, and they actually lowered rates to negative explicitly within the financial sector, meaning if you had your money in a bank, that balance was actually going down year after year. As a result, sales of safes skyrocketed for people to stash their cash in their home instead of the banking system. But the problem is that from a real purchasing power basis, even though you're not losing explicit balance year after year, on a real basis you are if you're just in cash. Simultaneously, negative rates create a bubble in just about everything. So there's no other way to store your wealth in that sort of scenario. And negative rates are really the fastest way to destroy a civilization. I call it weapons of mass confiscation. Bringing it all back to Bitcoin. Well, Bitcoin is the scarcest asset in the world, and it's also the world's best safe through unbreakable cryptography. Over time, people tend to use a money that's scarce, because if you can increase its quantity, you will, until purchasing power is whittled away. And we've seen that with every single fiat currency throughout history. This here is kind of our Mona Lisa, showing there will only ever be 21 million Bitcoins in circulation. And instead of trusting the Fed and central bankers and the FOMC, or even the ETH devs to maintain your currency's scarcity, all you need to trust are economic incentives and mathematics. So as abundant money increases, as fiat leaks into the world like a fire hose, it tends to go into scarcer assets, which is why over the last 10 years, we've seen some stocks with pricing power increase. We've seen gold do fairly well and starting to break out, but gold's done very well since the 80s. And we've seen art and even vintage watches do extremely well. So to wrap it all up, we've got a perfect storm for Bitcoin on the horizon, and it doesn't need any Bitcoin maximalist ideology to win. All it needs is greed and reckless government spending. And spoiler alert, neither of those two are decreasing anytime soon. So people will buy Bitcoin because it makes them money, because they need a way to escape these autocratic regimes like in China or Venezuela, and because they need to escape negative interest rates around the world, and they need a way to preserve their wealth over a lifetime. Buy Bitcoin. Thank you.